Evening, guys. Sorry for being a bit late. Been a very busy day. Could not get away from work for a long time. Multiple clients needed updates, multiple issues in terms of having to sort out funding and such. I mean, this happens when the market moves. Yeah, I mean, you basically, I can tell you what the day's going to be like, right? When I look at the market in the morning when I wake up. And this morning I'm like, oh God. Because, majority of my clients trade similar sort of pairs, if they're long-term clients, to me. So they're trading gold, they're trading dollar yen, they're trading, the pound. And so these are all in play right now. Aussie dollar, while it's the biggest pair that's obviously traded in Australia, is not moving that much, right? So it's in the sideline. But dollar yen, I mean, you can't get bigger than breaking 110. And it came from quite a large, sort of level. This is all the way down in a 24-hour period, a 200-point move there, and it's it's enough to sort of get you excited that perhaps some large moves are happening. Now, this is driven mostly by Trump's tweet, right? Trump tweeted that China, we want you to help out North Korea, but if you don't, we can do it alone. And then he left it with a little bit at the end. USC, and I was like, wow. I read that last night and gold was at 12.58 and I just bought. I just didn't even ask questions, I just bought. I'm like, this is ridiculous. He's gone straight from Syria into North Korea, and it's more like he's looking for that support that he got after he did the Syria bombing. It's almost like he's looking for that justification, that ego stroking that comes from being tough. And just such a weird tweet from the President of America. Anyway, so we got that, and so everyone's speculating that there's going to be war coming sooner rather than later, and there's red lines now, and Trump means what he says, and he won't deal with a nuclear North Korea. And North Korea's got this big anniversary coming up, and they might test a nuclear bomb beforehand or test another ballistic missile, sort of prodding America to say, come on, do something, in North Korean style. North Korea's not crazy, but, no one's really punished them militarily for what they've done because they're scared of what they will do. So, perhaps they get tested, right? And that sort of showdown's super dangerous because you don't know how it's going to play out in the next few months. So, what we've got this situation where there's this uncertainty that's creeped back in. Now, dollar yen's going to be reactive to this, not just because Japan's right next to North Korea, but because it's the cleanest safe haven, very similar to gold, higher. Gold's very reactive to this sort of situation. The other pairs, like the euro, is struggling pre French elections to gain traction, but generally, if this was to continue, euro should do well as well, and that's helping out our trade here with long euro. There isn't much on the agenda to stop that either. But right now, this is the game we're playing. We're playing risk on, risk off, and geopolitical themes. So with the dollar yen, though, as quickly as we come down, we can go back up. So I know traders who are buying here and just like, I don't care. Basically their view is there's not going to be an attack on North Korea. Therefore, this is going to be reversed relatively soon in the next couple of weeks as it becomes apparent there's not going to be an attack on Korea. I think that's a pretty dangerous trade, but I can understand it. It is really good levels for dollar yen longs. If you're a believer that Bank of Japan is going to remain on hold for a long time, and that US is going to raise interest rates a couple more times this year at least, then dollar yen now is really good levels. Okay, but it's in the middle of the storm, and while we are towards that 108 level, I would rather wait to see us actually get some resolution, right, on some good news regarding North Korea rather than some open questions, right? So I understand the trade. The level I would be buying if things got a little bit worse would be around 108. To break 108 really, I think, would require a sort of a military strike on North Korea. I don't think you can get there too easily without it. But keeping an eye on US yields have broken a key support as well. So, they're at levels which are crazy. Talking to bond traders, they really don't understand why US yields and the 10-year are so low, given what's the backdrop, an economic backdrop in America. So they don't think this is sustainable. So in that sense, if this is not sustainable, the dollar yen is not sustainable to the downside. So looking to buy dips starting soon, thinking that this is all going to pass over, does make sense to me. And I'm looking for the best level. I'm not sure if it's done yet. Things which will help get more confidence for the buyers is breaking back above 110 quite quickly. That would help, and then we can talk about buying dollar yen tomorrow if that happens. If it sort of fades into the background, that what's happening here is not going to get worse, and so no more serious strikes and no actual military strikes on North Korea, but China pressuring them, or something like emergency 6-party talks have been arranged by China. These are the sort of things that we can imagine how this ends, rather than a military strike by America. China has reached out to North Korea, and all the big players are going to be having a big chat about disarming a nuclear Korea and what incentives they can give it, blah blah blah. Similar to what we've heard in the past. If you've been watching this is an ongoing crisis. This didn't happen overnight. This has been happening since I think they first tested their bomb in 2004. So it's been a long time, and so I don't think it's I don't think they're going to go to North Korea now. If it goes in there, yeah, then we've got some issues, right? All our buying dollar yen on dips becomes just crazy. It can go below 100. Yeah, it can go below 100 easily. No, but I don't know. Seems a bit early, right, for the New World Order to come out. But yeah, I understand what you're saying. I mean, look, I think it's not. You don't have to be complete right wing to think that North Korea is a sort of rogue state in the community of global nations. It's not like they're just vilifying it, and on the ground it's actually a peaceful, loving nation and doing everything it can for its people, and it's just the world getting in the way of its different choices. It's actually a crazy military dictatorship that's destabilizing. Yeah, and so yeah, it might be used as an excuse for the hawks around the world to have a big military, but it's not. It's not unfounded completely. And it's going to be a story until it's we get a resolution. I doubt it's just going to be kicked down the road. The way that Trump seems to be playing it is he wants to push for something. Now that something is what's going to cause us to rally on dollar yen or fall. So we're going to have to keep an eye on the announcements in regards to that. But just broadly, if there is no announcements, dollar yen can't remain at these levels. Yeah, less news is good news for the dollar yen right now. It requires pretty constant headlines, and you had two doozies, right? You had Syria attacks, and then these North Korea tweets, and the North Korea, the US moving a strike fleet into range. Those are two pretty big things to come up for the market to absorb, but both by themselves are not game changing. Yeah, they're just putting us on alert and getting us worried. So I'm much more in the favour of buying dips than thinking this is going to escalate further. But there's other traders out there who think that this is beginning, right? So you got this marketplace here. Some people are happy to be selling the dollar yen on this break. I don't think it's the sort of sustained break which you get. Like if it's US not raising rates, or the Fed pulling back, or US slowdown, that's a sustainable dollar yen sell-off. Without the US dollar, the US economy slowdown, and we did have a little bit of a weak number in the jobs, then I don't think you get sustained sell-off in the dollar yen. So looking for two-way action is normal. Remember, the Deutsche Bank had that view that it's going to be between 108 and 114. And so, in terms of just stories out there at the moment, it's and I sort of agree with that. I don't think we can rally to 120 at the moment, with all the backdrop of Trump not having his ability to get things through. But even Trump's ability to get tax plans through, and the timeline of the tax plan may help dollar yen at some point. Just right now we're dealing with the break and seeing what happens next. So I'm looking to buy dollar yen, but by no means have I, right? I'm not buying just yet. Now short Aussies are still in play. Aussies under pressure still. The longer it stays sideways though, the more likely I am to close. And I am going to move my stop to entry here. It shouldn't really get to 75.70 quite easily at all. The Euro USD is the active trade I have. It was looking better 5 minutes ago. We've got a little bit of selling coming through here. I'm actually going to close this. This is a bit of a time trade. I wanted the rally to be a bit more substantial than we got last night. That was pitiful. And, you know, it goes back to the stage of, do I understand why the euro is falling? Not really. Where's the big level? 105. Okay, let's pull out and see if we get 105. Rather than buying at 106 or 105.90 and just seeing what happens next. Norbert, don't go too deep into it, mate. If you go down the rabbit hole, you won't come back out. Yeah, so we've got a pretty active market, pretty dynamic market, especially in the dollar yen. It's but you can see stocks aren't reacting as negatively as you'd expect. So if stocks don't react negatively, are they wrong, or are the bond market and the currency markets wrong? Yeah, one of these guys is wrong, right? Now, usually traders like to call the stock market the dumb money, right? The dumb money out there, and it's the last to fall, and it comes down and crash. Bond market's already shown the US, Trump trade reversal. Dollar's already showing dollar yen's already showing the US Trump trade reversal. Gold's already showing the risk off. So, in theory, Dow should be at 20,000, and that's the argument. So one of them's wrong, right? One of the correction's going to happen. Either the bonds are going to bounce back up, dollar yen's going to bounce back up, or stocks are going to get the memo finally and break 2,500, which has been tested multiple times here, and come back. Cable's strong. I mean, it's sneaking higher. No one's really paying attention to it, right? And it's just sneaking higher. Broke above 125 briefly here on the back of what's Carney speaking this morning, early pre-Asia. Makes no comment on thing. Sorry, the UK data. Would have been the UK data then. Average earnings picking up. Okay, that's big. That's the sort of inflation that you want. That supports this. That supports the market going higher. Yeah, you can't. They can ignore the pound, right? Leading inflation. They can't ignore wages leading inflation. So yeah, pound is well positioned here, and the US dollar weakness from dollar yen definitely helping. But it's not moving quickly. This is actually a very quiet movement for the pound. If we go to a 4-hour, you'll see that. It can move much more. This is pretty contained sort of range. And it's very comfortable levels here. So not too much to report on pound. I think it's probably going to be sticky. I don't see the reason to bust. I mean, apart from the short squeezing, it's not the right environment for a short squeeze, because pound yen is required to be punchy usually for the pound to rally, and pound yen can't rally because of dollar yen at the moment. So probably not the short squeeze just yet, but it's giving warning signs it wants a short squeeze. Yeah, I wouldn't be selling into this unless you're just trying to play the range. The big negative headlines will come next month for the Brexit talks, the potential big negative headlines, and potential positive headlines, right, in terms of Brexit negotiations. So we've still got a ways away. Yeah, so let's keep an eye on dollar yen and just generally stocks to see if there's a move here. Like I said, I'm looking for the dollar yen to stabilize and bounce, and for some good news to come out of China's relations with North Korea to lead sort of a resolution there. I mean, he's got multiple fronts where things can get worse, Syria or North Korea. So there is a fair bit of risk here. So dollar yen buying, probably you want to do smaller than normal. This is not full on buying. This is counter trend, subjective sort of trading, yeah. And it's that's you can get into trouble. So definitely trade smaller and have stops if you're going to buy a dollar yen or buy any yen cross. And maybe I'm too much more optimistic. Like, I did not see Britain leaving the UK, and I did not see Trump becoming the president. And same sort of certainty I had on those that Trump's not going to hit North Korea or assassinate the leader. Maybe I'm living in. Maybe I'm too naive. Yeah, maybe this world is going to be completely upside down from now on. But we'll see. We'll see. I'm not committed too much, and like I said, just short Aussie. I mean, Aussie goes down on many scenarios still. Yeah, it's a sort of good one to be in the market at the moment. Short. If things really heat up, it will fall. Too young to know you. I'm not that young. I've been trading for 10 years. But yeah, look, it's too optimistic, yeah. I haven't been jaded enough. I do think that America and China are going to have conflict in the next decade, though. I don't see how that happens. I don't see how they get away from that. I think that China will replace Russia as the boogeyman in the room. Just too easy a political target, right? Too much distrust between emerging superpowers. Or the emerging superpower and the declining superpower. Alright, let's have a look at some, that's enough ranting here, just general about the market, what's going on. Let's have a look at some specific reports. We'll look at the Credit Suisse technicals just before we look in the fundamentals. Main thing I'll be looking at today is the US yields getting back above 2.3 on the 10-year and dollar yen getting back above 110. Then I think I'm starting to sink in. Yeah, Kiwi yen. Kiwi yen. Kiwi yen, like the Aussie yen, makes sense level-wise to be looking for a buy. It's oversold, and if you like dollar yen, then Kiwi yen and Aussie yen are just faster versions of that. So if there's an environment where dollar yen's going to rally, then probably Aussie yen's going to rally. And we are down now towards this support cluster, which is the previous resistance zone. So I doubt that we're going to go smashing through this too easily. Below this, though, 80 is a big level. 80 is a big level on dollar yen. If you've played dollar yen before, it's a big pair in the market. I could imagine dollar yen trundling along, Aussie yen trundling along 80 for a while if dollar yen wants to break down to 108. So the Kiwi yen is sort of like another version of that. Kiwi, you can trade Kiwi and Aussie very similar most of the time. So it's probably getting closer to the end of the sell-off than the beginning. You can see the next, 100 to 200 points is pretty strong. Yeah, I'd be looking to buy overextensions, collapses. But yeah, I mean that's what you're looking for, right? You're not looking to sell here, are you? I mean, selling here is like selling dollar yen. You cannot go to sleep. You can't go to sleep if you sell down here. It's like wake up and you'll be stopped out for sure. Not for sure, but you can be. And where do you put your stop? It's just a very headachy trade. I'm just going to put my stop where? 110.10? 110.20? And I'm going for 108. Are you happy about the stock market rally? In the futures? In the Europe? I mean, all these things are not happy. I don't want to sell this right now. But, yeah, so, yeah, I think Kiwi's closer to the buy area than the sell-off area. If you believe there's not going to be bigger issues. Otherwise, we can go a lot lower. That's a lot of weekly downside. It's 11 weeks red. Jesus. An 800 pip move on a pretty small pipish sort of play. Historically, though, we still got a lot of room to the downside. Lest we forget what happened in 2007, 2008. Lehman Brothers. Are Euro Aussies well positioned to go higher? It just requires the euro to pull out its to try and get some basing going on. So yeah, Euro Aussie's under pressure just broadly. Euro is struggling though too, so it's making it pretty choppy. It's not the main pair I'm looking at the moment though. So yeah, I was pretty bullish on the Euro Aussie. I still am. I still see ways Aussie breaks down. Tomorrow's unemployment numbers from Australia. That could be enough to break us more convincingly to the downside, and that will allow this tentative support to be broken. If you see a couple of green candles here, guys, oh god, it's beginning again, right? The market's found support again. Just, you know, sitting with 77, 74. If that happens on the Aussie major, you can't sell, you can't be buying Euro Aussie. Aussie Kiwi's giving you a little bit of hope, Dave. I know you're a long-term buyer, right? Now it's had that pullback towards the support, which was the previous resistance. So previous resistance becomes support. Seems to have held a couple of attempts now. So perhaps we have found the buying zone. I was a bit concerned that we're going lower still. Maybe back down towards 105 again. But yeah, no, so far the price action is helping be more confident that we can go higher. It's definitely a pair which has gone back under the radar though. It's not really making headlines like it was when I was rallying. And broadly, if there's risk off in the market, Aussie Kiwi goes down. So that's your enemy at the moment, risk off. You get a big rally in stock markets and China relations and everything happening good. Aussie's probably going to find a bid, and Aussie Kiwi will start to grind higher. But yeah, it's it's not really where the action's at the moment. Aussie Kiwi, Aussie CAD, that's where the action's at, right? You know, because of that discrepancy between iron ore and oil. So it had a huge fall, and it's back at support now too. So we'll see how it goes down at this parity level. It requires Aussie to break 74 to go further, or oil to break 55. Both of those can happen. So Aussie to break 75, I'm sorry, and for oil to break 55. Alright guys, stop distracting me, we're trying to get through this. It's been a long day. Been a long day. What were we on? We're on to the update. FX Daily. Alright, dollar yen's completed a triangle continuation pattern. We're staying bearish. God, you technical traders have no care for such news as North Korea or Syria. Do not bore me with such talk. Just tell me the charts. Show me the chart, I'll show you the future. That's what they say. Alright, there's the buying of the trend line support here. Okay. Okay. We're looking for a sell-off in dollar yen to continue. Looking for the 50% retracement of June and the rising 200-day average. Where is the 200-day average on dollar yen at the moment? 108.50, I believe. 108.70. Yeah, that could be a target. Let's have a look at 200-day. Now, you know, usually at some point we're going to go into Ichimoku clouds and have a chat about Ichimoku clouds. I don't use them a lot, but it's important to check them. It's important to check them because the Japanese are a huge part of the yen market. And so don't ignore them. Don't just sit in your little bubble They're quiet, but they're huge. I'm long Euro Aussie at 155. Can I hold? Please say, Tony. You can, but it's not a clear trade anymore. You rely on weak Aussie data tomorrow. I don't think it's going to move much before then. And you can't be happy with Aussie not breaking 75 convincingly. Dollar Swiss. So yeah, this 75 level has to be sort of, you need to see a continuation to get all the crosses on the Aussie extending. Pound Aussie, Euro Aussie, Aussie Yen. Dollar CAD's very interesting, isn't it? Erratic sideways range. Yeah. Now, Euro Yen. Now, you know, I like Euro. Euro USD high, and I like Dollar Yen at some point soon high. Of course, Euro Yen's on the radar. There's some really big levels in the next 300 pips. You sort of want to crash. You know, capitulation would be really good as well. We didn't talk about capitulation, but capitulation move on Dollar Yen would be fantastic. Clean out all the stubborn longs that are still buying above 110. So pull it down. You know, this is like a one-day little smash all the way down to 107.50. You come back in the morning, it's 108.50. There's this big long candle, and you're like, oh, you know, what was that? And it'll be on the back of some sort of, you know, stock market move or something. But it's a capitulation move that is really important with Dollar Yen. If you trade Dollar Yen for a long time, you know what I'm talking about here. It's that final little clean out from all the people that have been stuck long from 112, 113 from previous rallies, cleaning them all out, and then that's it, right? That's sort of like the sell-off is sort of done. And we can start to rebuild longs, and the fundamentals can take over again. That's if it happens in the next couple of weeks, we'll talk about it. You know, the capitulation move is very reliable in Dollar Yen. So the VIX soared last night. So the VIX rallied without stock market selling off. So, you know, basically, stock buyers are buying a lot of protection to the downside. Now, if the market starts to sell off, then whoever they bought that protection off has to start to hedge. Can create a bit of a self-fulfilling prophecy to the downside. Yeah, so Trump tweeted, North Korea is looking for trouble. US will solve the problem, with or without the help of China. And then he said on an interview, we're sending an armada to North Korea. Chinese numbers were a little bit weaker than expected today. So nothing to talk about. Yeah, other than that, we have tonight we have the Bank of Canada, and we have probably more important for broader markets is the weekly US oil crude inventories, and it's now crude oil is now at the key levels, you know, key resistances. So if it was able to, you know, get support from that data and break it, then we could see some bigger moves come through on everything that's related to crude. If it is another huge build and oil collapses from these sort of levels, so bad, then it's quite high, right? It's quite high on the charts. So if it gets its legs chopped up, which it did previously, we'll bring that up. Gets its legs chopped out like that did that day. That was on the back of those numbers being a huge build. Then you will you might see another larger than normal drop on the oil, and maybe a drop and then bounce back up as all the geopolitical dip buyers get back in. So yeah, tonight that's the main thing that you'll be watching if you're going to be staying up for that. Yeah, pound Kiwi is it's killing, huh? It's probably the fastest mover pair out there. It's a nice trend as well, isn't it? Yeah. I don't trade it. I should. I should have a look. Yeah, that doesn't hurt the argument that pound's going high as well. Alright guys, look, everyone trade safe tonight. It's going to be interesting. I'm looking for the counter trend bounce here as issues subside. You've seen that coming through in the stock markets in Europe and in the US futures. So I think it's got a strong chance of happening. The key levels to get the market reversing would be that 230 on the US 10-year and the 110 on the dollar yen. That will help get everyone excited that the sell-off is over. But we'll talk about that tomorrow at 9 GMT when we do the next update. Thanks guys.